Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Man, people are asking me questions. When do I think cryptocurrencies are going to start to rebound and take off again? That's always a good question because everything is speculation. You're only guessing. Or are they? Is there a way to predict when cryptocurrencies are going to sell off and when they're going to go up? There might be. Before we get into that, if you could please hit the thumbs up button, and if you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. So can people predict when cryptos are going up and when they're coming down? Although there are ways to predict the way cryptocurrencies are going to go, this time around, there are some added things you should take into consideration. We are looking at a worldwide market crash. So this might be the exception to the rule. You'll see what I'm talking about here in a moment. So look at Bitcoin. Look at this. It's back up to $37,000. It was below $33,000, and all of a sudden it's jumping back up again. Ethereum's at $2,444. Cardano's at $1.04. Hex at 18 cents. Solano's at $92. The New World Order coin is at 60 cents. Dogecoin's at 14 cents. Polkadot's at $18.37. Shiba's at 4021. And Satoma is at 7020. Now, Satoma had dropped down to 7018, and I was starting to think, good Lord, they're probably going to end up adding another zeros. So Satoma, not looking good. As a matter of fact, over the last 14 days, this lost 54% of its value, 57 over the last 30. There is all kinds of issues going on with Satoma. CoinMarketCap added a negative article about one of the promoters. Then you had a terrible live launch. Then all of a sudden, SataMask wasn't launched when it was supposed to. Then when they did launch it, they had a bot attack where when they first opened, making it impossible for people to get aboard. Then there was issues with the actual SataMask wallet. They're working all those things out. You had one of the biggest developers decide to part ways. I mean, it's just one thing after another. It doesn't discourage me from holding the Satoma cryptos. I'm holding on to them, just like Shiba as well. Remember I said, riding and dying with them. I have in my mind a mark that once they reach there, then I'll get rid of them. So either they're going to go all the way down to zero or they're going to reach that mark. And the truth of the matter is, that mark might come a lot faster than people think. I'm going to show you why here in a moment. If you look at the 52-week average, you can see most of the dots are below the halfway mark. As a matter of fact, they're closer to the lowest ends. So is this normal? Is this predictable? The other thing I hate about these, look at all the graphs. They go in the same direction at the same time. Are cryptocurrencies predictable? Can you predict where Bitcoin is going to be? Yeah. I can tell you that since 2017, it's predictable if you knew what you were looking for. Yep. You've heard us talk about it before in the videos. The Wyckoff. Is Bitcoin and cryptocurrencies still continuing to follow the Wyckoff chart? Yes. Does the Wyckoff tell us what's about to happen with Bitcoin and the other cryptocurrencies? Yep. This article came out at the beginning of December last month. Let's hear what this article has to say. Why is Bitcoin crashing? Wyckoff accumulation? Despite the overall bullish sentiment in the market, the Bitcoin price has been crashing in the past couple of days. It's really crashed now. The bull run has been very different from previous cycles. On one hand, the macro aspects of the economy in general are different this time. The world is undergoing through a period of economical uncertainty due to the pandemic, as well as soaring inflation. On the other hand, the players involved this time are different too. Big institutions, crypto whales, and billionaires have been actively accumulating Bitcoin and shaping the price. One of the main strategies to do this is called the Wyckoff accumulation, which is exactly what the hell's been going on. You have to ask yourself, why are people like, Elon Musk and Michael Saylor and all them, why are they buying when the price is going down, down, down? That doesn't make sense. It's not like some millionaires haven't lost their ass off at one time or another, but these guys do this for a reason. And this article explains it to you. The Wyckoff accumulation schematic was invented by Richard Wyckoff, a pioneer in technical analysis in the 20th century. Wyckoff explained that all fluctuations in the market should be studied as if they were a result of one man's operation, and that the composite man sits behind the scenes and manipulates the markets to people's disadvantages in order to take profits. However, if you understand the game he plays, you can also enjoy great profits. That's right. All the price fluctuations we have been experiencing in the Bitcoin market have been manipulated by big interest. So this is how it goes. And there was a gentleman who did a video a few months back, and he said, look, everybody wake up. It's following the Wyckoff chart. I did a video on it. The composite, although it's misspelled here, the composite man pumps the price using a Wyckoff distribution schematic. Then he sells and collects profits. Afterwards, he dumps the price using a Wyckoff accumulation schematic so that he can rebuy back his position at a cheaper price and get more coins. Right now, we're experiencing a Wyckoff accumulation schematic in which large interests absorb all the supply in the market before a big pump in price. We're seeing that happen right now because it dropped so much in value. A lot of people sold. They got panicky. Now, keep an eye on this chart because look at the time of this article was December the 8th. That's as far as this went. The rest of this is speculation. Resistance at 52,000. Support at 41,000. Right now, we're somewhere in about, here, according to this. But the price is nowhere near above 41,000. Not yet. According to the Wyckoff accumulation schematic, a drop in price is manipulated by an institution that is building a position in an asset before the price increases. I think we just experienced a Wyckoff distribution during October and November. And now we are entering a Wyckoff accumulation. So they're saying a distribution in October and November, which is here. And now the accumulation, which is here, the low parts. A Wyckoff accumulation phase has different stages. First, we experience a dramatic drop in the price, selling climax, a dramatic drop in the price. So you have your first dramatic drop in price, okay, followed by a jump or recovery in price, automatic rally. This is followed by, again, a decrease in price the second time, and then another rally takes place and price increases, then another, so it's back-to-back rallies, okay? You see the dramatic drop in price, then an increase, and then a drop, and then a rally, and then another rally. You see it here too. Increase in price, a drop, an increase, a drop, a rally, then another rally. So, okay. A second test that can drop the price lower than the selling climax, and a spring. The spring is the lowest price level during this schematic. However, not every Wyckoff accumulation has one. After the last dump comes a recovery that is characterized by a last test around the resistance level and a sign of strength above the resistance level that can signal the bear is over. In other words, for those who don't know, the bear market is when the values go down. A bull market is when they go up. This looks like the bear market is over and you're now on a bull run. Then all of a sudden this drop, then a recovery, then a drop again, and then the indication that the bear is over, and it jumps back up again. And then a drop, a recovery, a drop, a recovery, the indication that the bear is over. A drop, recovery, a drop, recovery, indication that the bear is over, and people are buying. Here you go. See it? See the pattern happening over and over? This is following the Wyckoff. As a matter of fact, the person overlaid the Wyckoff chart back here in the spring and summer of 2021 when we did the video, and it almost laid to the perfectly, like as if it was outlined on there. So what can we expect in the next weeks? The support level was set by the selling climax at 41,000. So we can expect a second test and a spring to be below this level. The resistance level was set by the automatic rally at 52,000. So we can expect a pump around this level and a sign of strength above this price that would indicate the bear is over. Have we seen that? This is not the first time these schematics have been applied to the Bitcoin market. Back in March through June of 2021, the same trick was played out. Yeah, this is what I was talking about. We saw this. We pointed it out in the video. So you have your dramatic drop, recovery, down, bear market's over, bull run. Same thing, goes down, bear market's over, bull run. Dramatic drop, recovery, drop, bear market's over. See how they're doing this? It's following this. So this happened, he said, between here's July right here, and here is March. Yeah, you can see what they did. The accumulation stage. The past Wyckoff distribution that took place in May took 96 days to play out. This time it took 51 days. The time frame was almost cut in half. The Wyckoff accumulation took 72 days to play out before the price started to recover. If we follow this logic, that this time the time frame will be cut in half, this will mean that it can take up to 36 days for the accumulation to take place around January the 5th. Now, mind you, this article is in December the 8th, so they're showing you right here how the Wyckoff played out in between March and July. Okay, the accumulation, here we go again. This part right here is this part. It's shorter. The rest of this is speculation, what they're talking about. So this one took 51 days, and now what they're saying is the accumulation is 36 days. We are in the accumulation stage. So it starts around January the 5th, which is about here. Here we go. We're in this stage right here. I know it's not played out yet because we're going through what this person's predicting if we follow the Wyckoff, and it has been since 2017. Although you can't see the chart playing out, this person is speculating just like we're going to. If it starts around January the 5th, the accumulation took place, and are saying based on past patterns, this one should only take 36 days. So if it starts somewhere around the 6th and this person thinks it's going to take 36 days, fine. So somewhere after the first week of February, we should start to see cryptos go back on another bull run and work its way to new record highs. Now, the difference between previous Wyckoff runs versus where we are now, before we weren't having worldwide market crashes. So those might be something you take in consideration and why it might throw us off the Wyckoff. In addition, in the past Wyckoff distribution and accumulation schematics, the distribution support level at 48K was the next sign of strength during the accumulation phase that followed. If this is accurate, this means that the next sign of strength for this accumulation period should be around 58,000. This was the support level for the recent distribution. So we can expect the price to keep oscillating between 55,000 and 41,000. So that's the accumulation stage. However, it can still go under since we are missing the second test spring event. With that being said, I am still very bullish on Bitcoin, so keep holding. We're going to find out if this person's right and if it continues to follow the Wyckoff chart, barring any major market crashes. If that's the case, then you can't predict when Bitcoin's going up. According to what we've experienced already, after the first week of February, we should start to see cryptocurrencies go on a major bull run to new highs, if this is accurate. So when we looked at the Wyckoff back in July of 2021, it was only covering this whole part right here. All this other part had not played out yet, and it laid over the Wyckoff perfectly. If you think about the person who wrote that article talking about between, March and July, which is down here, you could see how the chart looks. I told you that a person had pointed this out, that if they laid over the Wyckoff graph, they almost matched perfectly. So let's take a look at it. This is the chart right here. See this? They're talking about just this point here. And then it dropped down. And then it dropped down. So everybody's like, everybody pay attention, it's following the Wyckoff. So if you know this ahead of time, this is the accumulation, by the way, which matches this part. See this? So you go from this down to this, and takes off. That's what it is. We were here, then it came down to here, and then it's going to take off again. Then you have another one of these down here, and then it takes off to new highs. So you get a new low, and then a new high, and then a new low, and then a new high. And each new low is higher than the last low, and each new high is higher than the last high. I hope that makes sense. There's no guarantees that it's going to continue to follow the Wyckoff. All we know is that it has been following the Wyckoff since 2017. This time around, the difference is we are looking at an inevitable market crash. It's going to be pretty devastating. So just like I said before, the suggestion would be, if you're going to play around with cryptocurrencies, a couple of things. One, buy on a dip, which is where we are right now, the accumulation stage. Despite the fact that it goes up and down around $10,000 a Bitcoin from day to day, that doesn't mean you shouldn't be accumulating. Don't let that fool you. That's what it's meant to do, is scare people out of their coins. And then these people that are in these major institutions and rich people buy them. This is accumulation. If we do what they do, not what they say, but do what they do, and you're accumulating, in other words, with your discretionary funds, you're adding more and more, and you're not letting the drop in the current values scare you because you know it's going to go back up, then you are accumulating a lot of tokens that you're going to really appreciate when it goes on a bull run. Now, I've not updated this in a long time. We used to do this thing called Stock Watch. Back in March when everything crashed, I told everybody, look, there's a way you can get rich off this, because just understand that when everything crashed, we knew that eventually it would recover and then some. So on April 21st of 2020, we did this fictitious portfolio. And what do we have? Well, we could buy Bitcoin at $6,879 a coin. You could buy Ethereum at $148. And XRP was 18 cents. There was a couple other cryptos on here as well. I said, let's pretend like we pumped $10,000 into each one of them. The last time I updated this, shares at Bitcoin were around $50,775. So what this means, on April 21st, had you put in $10,000 into Bitcoin, $10,000 in Ethereum, and $10,000 in XRP, from the last time I updated where the current values were, which was Bitcoin was at 50,775, Ethereum at the time was at 4,334, and XRP had made it up to 82 cents. This was the profits. Mind you, this is much lower than its peak levels, but if you take away your original $10,000 investment, this would have been your profit. Off Bitcoin, you'd have made $63,808 profit before taxes and fees, because everybody gives me crap about that. On Ethereum, you would have made $281,430 profit before taxes and fees off your $10,000 investment into Ethereum when it was $148. XRP, you'd have made $34,000. We were keeping an eye on all these different things back then. So I haven't updated it in a while, but even so, you could see what kind of profits. I'm going to show you what we were looking at. So here's what happened back then. You can see right here in the Dow Jones, once we went into shutdown due to the RONA, you can see what happened to the market. So in February of 2020, everything dropped down here. Here we are in March. And I said, hey, look, these things are going to recover. I mean, some of these stocks, do you really believe they're going to stay this low? Some of them lost 40, 50, 60% of the value. And I said, this is how rich people get rich. What they do is they wait till they feel like the bottom has finally been met, and then they buy their stock at a cheaper price and then benefit from its rise. Here's what happened right here. Dropped, and then everything started to go up. So it was around April 21st when I was mentioning this, hey, stop being so doom and gloom, everything's going to recover. And so we made our fictitious portfolio. So anyways, here's what happened with Bitcoin. Here we are, it's February 2020. Just like the stock market, boom, it drops all the way down. Here we are in March. When we got over here about around April 21st or so, we're at about right there. I made the suggestion that we just pretend, because look, it's going to recover. I told everybody, let's recover. And here's what happened after that. Here's where we started after the drop. Here's where we started. Here I am on April 21st. See, here I am down here at the bottom. Look what happened. That's a recovery. We're going through that same thing right about now. So you can see with Ethereum, the same thing. Here we are in February. All of a sudden, we're getting into close down. It drops all the way down here. So from around April 21st, which is right here, down below, Ethereum went from here to there. We're talking about 1 year's time. 1 year's time. Your $10,000 on Ethereum made you $290,000 profit. What we notice in the Wyckoff, if you overlay them with the cryptocurrencies, is there is a pattern. There's a new high followed by a new low that's higher than the last low. And then we get a new high again, which is higher than the last high. And then we get another low, which is a new low, but higher than the last low. It's almost like stairs. So is that going to happen again? Again, the only thing to take in consideration this time around is what? We're looking at a market crash. That can change things. So you might take all these things in consideration and say to yourself, well, according to that article, we should start to see cryptos rebound after the first week of February. We're going to find out. That's not that far away. That's why I'm not getting rid of my cryptos. I'm holding on to them. I'm expecting a huge run. I'm not getting rid of them. I'll accumulate more. They're cheap. They're on sale right now. Something to think about. But don't ever invest more than you can afford to lose. So keep that in mind. Anyways, that's it for now, man. Hit the thumbs up button. You guys let me know what you think down in the comments, and we'll come back around and follow up with what you say. That's it for now. I'm out.